Just to kind of level set here, things that are going on in the last 2 weeks, Composer X, which is by DTCC, they've launched an API that allows you to start building financial services technology in all parts of the ecosystem. On the regulatory front, if you take outside of the United States, places like the FCA in London, which is one of the UK, one of their main regulators, actually just about 2 weeks ago, they set up a field office in Washington, D.C. A lot of folks don't know about. That's the first time the United Kingdom has done that outside of the United Kingdom directly. So they are, by action, looking to partner, looking to build cooperation across the pond, so to speak, on the regulatory front. Traditionally, you see central banks outside of the US that are the main regulators for financial services. Here in the US, because we have a different legacy system, we have that federal and state overlay. And so what is going on now is, I'm sure folks have heard this, you have the Stable Act, you have the Genius Act, you have different pieces of legislation and you have the OCC, you have all these different governmental agencies that regulate banking and financial services. What they are all doing some version of right now that is beneficial for the folks here is they're all trying to figure out how can we reduce some of the friction that exists as a part of our legacy regulatory structure. And so what they are doing and why I think it's important to pay attention to that is specifically the discussion is going on around changing rules for stablecoins. And just to level set the room here, the stablecoin is just another version of a fintech revolution. Historically, the ability to send a bank wire was fintech. Nowadays, we don't look at that so much. But, Circle has just announced they've launched a payments network, which is an API-based end run around the traditional SWIFT system. And they're operating here in the United States. And they're actually open to all fintech partners, so folks in this room, folks that are watching this, to be able to participate in that network. And I think what we're going to see is a lowering of the temperature on some of the regulatory hurdles. And the reason for that is, if we kind of take a step back, 6-7 years ago, when folks were first starting to make rumbles around crypto, people didn't make the connection that this was financial services technology. They just looked at it as kind of an isolated thing. But then over the years, what people have started to realize is, wait, stablecoins is just a modern day version of Visa, MasterCard. The ability to move money on your cell phone, regardless of whether you have a bank account, that's a major innovation in fintech. And that's what we're watching right now. And what different regulators around the world are grappling with is effectively, how do we want to allow or not allow access to this level of innovation? Because it's such a high level of innovation that folks have to think about more macro prudential issues. Because when you can allow, for example, tens of thousands or millions of people to move money in and out of countries at a time, regulators want to, have a say in that. But what I suspect we're going to see, and what we're starting to already see, is that the regulators globally are going to be talking and communicating to allow this innovation to happen. And that's because they realize they benefit actually everyone in all communities. When you allow, a street worker in Southeast Asia to be able to communicate and interact with a taxi driver, and you allow a startup founder in Richmond to then also be able to offer innovative financial services to folks in other jurisdictions, you're actually just increasing the pie from a GDP output perspective. Everyone agrees with that, but the piece that folks are still grappling with is how and where do they set the guardrails. And so in Europe, they're taking a more strict perspective, and the US is taking more of a traditional kind of American perspective of free market enterprise. And what I see in the Asian market is they are in more of the US side, but trying to take a wait and see perspective and be accommodating to really everyone else. So I suspect we're going to see within the next, 6 to 12 months, a drastically different opportunity set for fintech founders, both here in Richmond and internationally.